Today, we're diving into a company that's right at the heart of the AI revolution. And honestly, it's become a huge multi-billion-dollar question mark. The company is Lumentum. They build the invisible plumbing that AI absolutely depends on, and their stock has just gone to the moon. So let's dig in and figure out what is going on here. First, just let this number sink in for a second. 190%. That is how much Lumentum's stock has exploded this year alone. Now, a jump like that is never an accident. It tells you there's been a massive change in how the market sees this company. It's gone from just another tech player to what a lot of people think is a must-own AI stock. And that right there is the big mystery we need to solve. With the stock price flying this high, is Lumentum really that critical piece of the AI puzzle that's still a smart buy? Or are we looking at a dangerously overhyped bubble that's just waiting to burst? That's the $20 billion question we're here to unpack today. To really get what's happening now, you have to understand what came before. Because before Lumentum was the new AI darling, it was a completely different kind of company. So let's turn back the clock a little. This slide right here, it tells the whole story. On the left, you've got the old Lumentum, what Wall Street just called an Apple play. Its entire fate was pretty much tied to the iPhone. But on the right, you see the new Lumentum, a powerhouse building the absolute backbone of AI data centers. So how in the world did they pull off that switch? You see, for years, Lumentum's bread and butter was making these tiny 3D sensing lasers. You know, the tech behind Face ID on your iPhone. And their #1 customer by a mile was Apple. Now, that's great business for sure, but it puts a real ceiling on how Wall Street values you. The market saw way too much risk in having all your eggs in one consumer-driven basket. But then, everything changed. The company hit a massive crisis that basically forced them to either reinvent themselves or just fade away. And it was right here, in this moment of chaos, that the Lumentum we know today was really born. This timeline lays it all out. In 2022, they bought a rival, NeoPhotonics, to kind of shore up their old business. Then in late 2023 came the big move. They bought LITE to go all in on AI data centers. But then disaster hit in 2024 with a huge industry crisis, only for them to pull off this incredible V-shaped recovery in 2025, thanks almost entirely to AI. And when I say crisis, I mean it. Just look at how bad it got. During this thing called the inventory correction, their customers just stopped buying, period. Revenue absolutely collapsed by over 23% in 1 year, falling from $1.77 billion all the way down to $1.36 billion. It was a brutal, brutal hit. And look, this wasn't just a Lumentum problem. The entire optical industry went through one of the worst corrections it had ever seen. What happened was, all these big telecom companies had panic bought parts during the pandemic. And then suddenly they looked around and realized their warehouses were stuffed with components they didn't need. But, and this is the brilliant part, out of that crisis, they engineered this incredible pivot. Step 1 was defense. Buy NeoPhotonics to stabilize the old stuff. Step 2 was pure offense. Buy LITE. And that move let them do step 3. Instead of just selling tiny little laser chips, they could now build and sell the whole package, these high-value modules, directly to the biggest names in the game, like Microsoft and Google. Okay, so that gets us to the tech. What exactly is this plumbing of AI that Lumentum makes? What are they selling that's so important it can spark a 190% rally in their stock? Honestly, this is the easiest way to think about it. We're in a new gold rush, the AI gold rush. Everybody knows NVIDIA is selling the picks and shovels, right? The GPUs that do all the heavy lifting. Well, Lumentum provides the railroads. They build the super fast networks that connect all those GPUs together so they can act like one giant brain. And this little thing right here is the key product, an optical transceiver. It might look small, but it's an insanely complex piece of hardware. Its whole job is to take electrical data from a computer chip, turn it into a pulse of light, blast it down a fiber optic cable, and then turn it back into electricity on the other side. An AI data center needs thousands and thousands of these things. So you might be thinking, why not just use good old copper cables? Well, here's the deal. At the speeds and over the distances you need inside a massive AI cluster, copper just can't handle it. The signal gets weak and messy. Fiber optics, powered by these transceivers, is the only way you can shuttle that much data around perfectly. And this is Lumentum's secret weapon, their crown jewel. They make their own laser chips out of a special material called indium phosphide, or INP for short. Turns out it's the perfect material for crazy fast communication. And because they control the entire manufacturing process themselves, it gives them this huge competitive advantage. It's their golden ticket to sell directly to the biggest customers on the planet. Okay, so Lumentum is a critical company. They have killer tech, they pulled off an amazing turnaround. We get it. But that still leaves us with the big question. What is this company actually worth? Can we really justify a stock price that's this high? All right, let's cut through the hype and look at the cold, hard numbers. A deep dive analysis was done using some pretty standard valuation models to figure out the company's real intrinsic value. So what did it find? So first up, we've got the discounted cash flow model. It's a classic way to value a business based on all the cash it's expected to make in the future. And after all the number crunching, this model suggests an implied share price of about $126. Okay, remember that number, $126. Now, let's put that number into context. And, well, this slide is kind of the bombshell. The model calculates a fundamental value of around $126, but the market, as of November 2025, was happily trading the stock at around $242. I mean, that is a gigantic gap. The stock price is nearly double what the model says it's worth. And here's another way to slice it. The stock is trading at 77 times its owner earnings. That's a metric that really gets at a company's true cash-generating ability. 77 times. For a company that makes hardware, that is an absurdly high number. It's the kind of valuation you'd expect for a software company. It just shows you how much incredible future growth is already priced in. So, what are we supposed to do with this? We have an amazing company executing a brilliant AI strategy, and a stock price that seems completely disconnected from reality. How do we square that circle? What's the final verdict here? The analysis really points to three big risks you have to consider. First, something called an air pocket. If the big cloud companies, your Googles and Microsofts, suddenly pause their spending for just a little while, this stock could fall off a cliff. Second, there's always the risk that some new technology comes along and makes their current stuff obsolete. And finally, there's debt. The company has a lot of debt that could one day be converted into new stock, which would water down the value for everyone else. And all of that brings us to the bottom line, the big takeaway. Lumentum is a fantastic company. They've successfully made themselves a vital part of the AI revolution, no question. But a great company is not always a great stock, especially not at any price. This analysis strongly suggests the stock's valuation has just gotten way, way ahead of itself. So I'll leave you with this final thought. There is no doubt that Lumentum has won. They've secured a critical role in building out our AI future. They are essential. But the real question for investors today is this. Has its stock price already run a victory lap and crossed the finish line long before the race is actually over? It's a question worth about $20 billion.